In this video for the trading community, learn how to use the past, by that I mean similar trading events to the present, to make winning trades. Hi, I'm Mike Bellafiore, co-founder of SMB Capital. We're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade and the Playbook. In this video lesson, a proprietary trader from our firm breaks down a breaking news trade spurred by a research piece that spotlights how studying the past, similar trading events, can help us make winning trades.
This trade was made this past Tuesday in LOPE. It was a breaking news event, and it was a short piece that came out per Citron Research, and it was a scalp to the downside. So this type of breaking news event is a short seller hit piece, which is basically when a fund who is known primarily for short positions, it's a firm who is very active in taking the short side. They believe maybe a company is overstating financials or something shady is going on, and so they'll release valuations and they'll release opinions on why they have a short bias and why others should be short in this stock. Some other prominent shorts activist firms are Hindenburg Research, Spruce Point Capital.
Good best practice to be following some of these short research activists who can move stocks.
So I got together a few other examples. I wanted to see how this chart that I'll show later in this playbook compared to other short hit pieces when they were released. So this is Fleet Corp from Citron Research. They put out a piece calling this the biggest clean energy fraud in the United States history. You can see that volume bar that came in when that news was released and how the stock reacted. So similarly, Citron also posted a short piece on Peloton. This was back in December of this past year. They set a $5 price target. They released this midday, and there was a similar reaction to the downside where we have this huge uptick in volume, but there's some indecision right off the news. Whether this triggers action on either side, there's some indecision that's repeated in this past one and in the next example. Smile Direct Club, this one was not Citron. Hindenburg released an evaluation on this company. They said that the market value was about, there was room for an 85% downside. And this was released at 9:44 on this day. You can see the volume bar right as that piece was released and what happened to the stock. So a similar pattern we can see is that there is a little bit of indecision right as the news is released. There's an uptick in volume, and throughout the rest of the day, there's an opportunity to catch a bounce at some point or another.
So, yeah, go back to that. I really like what you're doing here. This is a terrific best practice. So, we're trading a Citron hit piece. Well, great question to be asking yourself is, hey, let me go back and look at the last 3 or the last 5 occurrences when a Citron hit piece came out. Let me go back and look at the last 3 or 5 of them, because that is what's happened most recently. We don't want to go back and look at the last 100. We want to know, hey, what are the last 3 or 5? How has the market reacted to a hit piece from Citron? And get a sense as to what this potential hit piece can do. So, and you want to be doing that and keep that in mind when something like this comes out. Now, for something like Spruce Point, he's going to tee that up. I don't think Citron tees them up as much as Spruce Point does, so Ben's going to send out an email, tweet out, hey, I've got something coming. And if he does, you certainly want to go back and say, hey, the last time Spruce Point had a hit piece on stocks, let me go look at the last 3 to 5 occurrences, what happened? And take a look at that. And what happens changes. If you want to learn 3 real-world setups that our traders use including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education. So there's periods when these guys get really hot and their hit pieces come out and the stocks trade weekly and they continue weekly lower. And then there's periods when they get hit on the market sells it off a little bit, but then there's a bounce opportunity. Max, I think you might have mentioned this, and I remember you talking about this in training at one point, if I'm correct. But you'll see that pattern. I mean, this is a trade. The trade is there is a particular short activist that's putting out a hit piece. How has the market reacted recently? And it's not necessarily just about whether or not this person is right or not. It's not even necessarily about whether his analysis is particularly persuasive or not. It's how's the market reacting? How are the bigger players reacting when something like this comes out? So just like we had a meeting in here just before, and there are some traders that are doing some historical studies to give them some edge for how the market is going to finish on a particular intraday. So if we gap down and we're near the lows on an intraday, what is the likelihood that we'll finish at the lows? They'll ask a question, they'll query, and they'll get an answer for it, and they'll get a reading. And sometimes the readings are, if we gap down and the market's been really strong of late, there's good odds that that's going to finish high of day. And so they're asking questions, they're getting answers, and they're using it to give themselves a better opportunity to make better decisions. And so you're taking that and you're applying that to this. And so, it seems like, from taking a quick look back, that there's that quick move down, which is a good opportunity. And then there's a good bounce opportunity. And so knowing that gives yourself more data, and you're better planning, you're better prepared to think about how this might trade. If you didn't do that, maybe you would just think to yourself, oh, Citron hit piece comes out, that makes sense, this stock's up a bunch, let me just short it, and not perhaps think about the potential for a bounce. But that's good. That's a very good best practice. What has the recent history shown me about a hit piece like this and how a stock has traded that I can use going forward?
Big picture, the overall market, over the past few weeks, we've just continued to hit new highs, consolidating near 230 the end of last week until this news came out, the coronavirus, and we had a really sharp reaction to the downside. The market traded a little bit lower and gapped down Monday morning, hitting a low of 322, and investor sentiment is still somewhat negative. So there's no systemic push higher that could have caused LOPE, the short position, to maybe bounce back quicker than otherwise. LOPE also, on a longer term time frame, they had been above their 50-day moving average, and just the day prior, Monday afternoon, at the close, they closed underneath of this 50-day moving average for the first time in well over a month. So some intraday fundamentals. See the ATR provides enough liquidity, the stock can move. The ATR provides enough volatility, the stock can move. The average daily volume is not above 1 million, which is not something that I would love to trade, but in this scenario where there is a short piece that comes out, that news would be reacted to much greater, because there isn't as much volume coming in and out of the stock. There are less buyers and sellers that are pinning the price to one specific spot. The R-vol is 6. there was a ton of people that just came in and was reacting to this news and showing that the news was significant. The short float wasn't anywhere where it would be an issue, and the institutional ownership at 99.5% shows that they have a significant holding in this company, institutions do, and that if they make a decision, they can tend to move the price in one direction and potentially, say in this example, if they saw this and they agreed they wanted to exit, they could potentially hit a sell order and just sell incrementally throughout the rest of the day.
All right, good. And so the other way to think about this trade is after the news is released, what is the reaction in the marketplace? So if there's a lot of volume that comes in, on the sell side, we can use that pattern as a way to trade going forward. Maybe we recognize patterns that are oversold. Maybe we recognize patterns that tee up continued selling going forward. But if you hadn't done the research prior, what has happened in the last 5 Citron hit pieces, you could look at the reaction, the immediate reaction, and start to study patterns from immediate reaction after a news event like this and build strategies off of that.
Long term, just to reiterate, the stock had been hovering around consolidation area for a little bit, and this is a weekly chart right here, so it's a little bit more condensed, but the stock moves, and that bar, they closed just below their 50-day moving average, maybe initiating some longer term sells to begin with. So shorter term time frame, we see that the stock traded down about 6% from the highs of the prior week, and having this longer term consolidation and then breakdown, and then especially this 5-day chart where it shows the downtrend is pretty clear to the downside without too much retracement back higher. It's showing that there is both long-term and short-term technical support for a short thesis or a short trade in the stock. So intraday, you can see what happens here. This volume bar is 100 times greater than the one prior. The stock was already trading somewhat negative in the morning, and again, it was down on a short-term and long-term time frame. So not only is it down, not only is it trading right around VWAP, but the moment that this price, that the short piece comes out and the price starts to fall, it can't really retrace towards VWAP and fails to hold above it for the next immediate term. There's lower highs, lower lows throughout the rest of the morning session until midday, showing that that bounce that we were expecting, the bounce that we were talking about through the 11 o'clock meeting, that may not occur right away, and that we should wait to see how this turns out. And throughout the day, there was just a continuous failure to retrace up towards VWAP. So the trade management, the news hits. To be clear, right here is a 133 tick chart. This was just default. I didn't choose 133. It was just a tick chart that I could pull up. We see what happens between 9:30 and 10. There's only 2 bars here. There's not a lot of action going on. Between 10 and 10:55, there's a little bit more movement, but between 10:55 and 10:56, just the amount of volume and the amount of change in the price is so exaggerated. And we can see what happens is there's some indecision. The news hits, and the price is moving right around before, as I mentioned earlier, the sellers win that fight on the tape, and the stock tries to retrace towards VWAP, fails, and just trades down for a little while. So right as the news hits, I get alerted to it, and I get this alert fairly quickly. There's really not that much latency, so I knew that I wasn't late as the volume was starting to come in, but it hadn't really made a significant move to define my entry as too late. So because of that, and because I saw that the sellers and the outflow was just coming in at a much greater rate, I wanted to take the short position, and especially it's a short piece, of course I'm going to take the short position on it, and I got short for a scalp. Now the reason I wanted to do a scalp on this was because of the prior, the historical occurrences where a short piece comes out, there is going to be some indecision, and in the case that the buyers potentially disagree with Citron, I didn't want to be stuck in having the volatility just wake me out and get stopped. So I'm taking a short position, and there is a low put in here. It's tested 3 times before it again tries to retrace and then fails a view up. And while it's in this movement right here, I place a bid. So I'm placing an order to get flat out of my short position to rebuy the stock somewhere below here. So this low put in right here was 88.27, and I'm thinking, okay, if it breaks through 88.27, there's a ton of volume, way more than usual. Our vol was 6 throughout the day and much greater at this point in time. And because of the volatility in the movement, went from about 91 down to low 88s, that the stock could take out the 88 and somewhere in 87 was where it would end up. So I placed an order at 87.91, hoping to get filled if the price would break below 88, and then potentially reevaluate for an entry later on.
Okay, go back. So trade number one for a breaking news trade is the news hits, you connect the dots, you feel you have an edge with speed and with connecting the dots quickly, that this should trade lower. You hit the bids because of your because of how these hit pieces have traded in the past. You're thinking it's a scalp, so you play the momentum to the downside. When the selling pressure subsides, you cover. That's trade number one. First in, quickly in, connect the dots quickly, scalp it. You could have a nice move that way. Don't mess around with price, just hit the bids. You may miss it, and trade it. Then, after that, you're thinking, as the stock goes back up to VWAP and kind of fails up there, potential short of a lower high. Okay, that's trade opportunity number two. Trade opportunity number three is it gets below the lows from the first initial down move. Okay, that's another really good trade opportunity. Another trade opportunity is they're trying to push it lower, they're trying to push it lower, they're trying to push it lower. It can't go lower. Bounce trade, or capitulation, blow off bottom, too steep, huge volume, play for a bottoming action, play for a reversal. You need to see these as specific trades and develop a way you're going to attack each one of them and think that way. Okay, so, and you can put that together to build separate playbook trades, separate subsets for a breaking news trade in your playbook. Okay, and you're all different. All right, so some people are not going to feel comfortable hitting the bids right away on a particular breaking news trades. That's just not going to fit your personality. Some people are. Some people are going to need to sort of be first in. They're aggressive. Some people are going to need to wait for a lower high, a clear lower high after a hit piece comes out to short and play for potentially a lower day. Some people are going to develop systems where they're looking for the capitulation blow up to play for a reversal. Some people are going to need to see it not going down, unable to make a new low, start to show the strength for a swing reversal trade, a swing reversion back to where it came from trade. And all of those are different personalities. The hit it first is the quick thinking, aggressive person. Have you been successful in the past as a quick thinking, aggressive, I like to take risk person? If that is your past, hit it. That's you playing to your strengths. If you are the more deliberate, safe, conservative, logical, more analytical thinker, you may need to see the lower high clearly put in with a hit piece that makes a lot of sense and something that is broken on a longer term chart with a clear area where you can get out and something you feel confident based on the hit piece that this can finish low of day, and then short it. Maybe something like a Peloton. Maybe the Peloton piece made more sense to you, and short that lower high. And so We talked about this which is, my sense is you probably would do pretty well putting the dots together quickly and reacting. Maybe I have misread you, but I could see you being good at that. I can see you being good at this trade. As we get to know each other a little bit better, I can see you being really good at this trade. I can see you connecting the dots quickly. I can see you very quickly being able to keep track of what happened the last 3 to 5 times in a Citron hit piece and be able to see the patterns that you want to trade for you quickly, which is what you need to do. And good. So I would encourage you to keep working at this. And then obviously the results are the results. If you think you're going to be really good connecting the dots and hitting this quickly and being aggressive, you tag and measure those trades and your results come back crappy, either we need to work on that particular strategy, or maybe it isn't the best for you. The measurement will tell us. Or maybe you're making a breaking news scalp trade and you're making a lower high follow-through trade, breaking news follow-through trade, and you're noticing that your breaking news follow-through trades are just scoring much better. Those are the ones that are really capturing P&L for you. That will inform you as to what to do. Think about that. This is a great trade. We've talked about this a lot in the past. Worthy of study. There are great active traders deploying this strategy with incredible Sharpe ratios, with incredible return on investment, who make tons of money. You could just trade this one particular strategy and have a career. It's that effective of a strategy when you master it. Now it's your turn. Do you study the past, similar trading events to the present, to help make winning trades? If so, how do you do so? Let us know by leaving a comment below right now.